So is the Berkshire way back? With me now is Bob Miles. He's a longtime shareholder and author of the Warren Buffett CEO. So I guess I know your answer, Bob. You probably think he never went anywhere.
He didn't. He says principles are, well, thanks for inviting me on your show, Kelly. He says principles are principles because they don't change. If they change, they're not principles. So he never went anywhere. I think the market is paying attention to him now, mainly because of the share price. Not so much this acquisition of Alleghany. Yeah,
so the real sort of the shift to watch that's been really fascinating is, once again, to look over the last couple of years at all the stocks that were outperforming during the pandemic and now how quickly they've come back down to earth. And what is it that you think for Berkshire is working? Is it just value in materials and solid business? You know, everything seems to be going right for them right now.
Yeah, Warren says we invest in insulation, paint, bricks, try to control your excitement. So value never went away, but I think what the market's now realizing is that value is a component of growth. And I think now there's a shift towards value and a lot of attention on Berkshire because of the $500 million mark of their share price. That's unprecedented in the capital market history. And we'll probably see the $1 million mark in another 7-8 years if it continues to grow at 10% a year. So
wow,
that's the attention it's getting. And plus, I think the gamification made the stock market somewhat of a gambling vehicle for a lot of young people. I was just at the University of Florida lecturing this last week, and they talked about crypto. And they're worried about crypto in that one person's tweet can change the price instantly. And I sense that there's a drift, particularly of young investors, away from the gamification of the stock market and away from crypto and more towards, hopefully, what Warren says are the good investments, which are productive assets.
Sure. Now, what do you make of the Alleghany deal, which it's kind of more of the same? It's actually pretty small in the grand scheme of things. And during the pandemic, with these huge stock moves where they could have been more opportunistic, we didn't see Berkshire jump in and buy an airline, for instance, or anything like that. So before, Munger and Buffett leave the company, is there something you'd like to see them do? Have you been frustrated at all in their kind of lack of action here lately?
No, I'm a patient long-term shareholder, which is exactly the type of shareholder that Warren and Charlie want to attract. I think the SPACs had a lot to do with the lack of opportunity. His largest purchase to date has been his own stock, over $50 billion in the last 2 years, more than Apple, his second largest investment. And Alleghany is top 10. So it's a big deal, but I think they're just patient, and he can sit there and just wait for the market to come to him. And I think the SPACs, the gamification has, and a lot of investment towards innovative stocks are really outside their scope of interest. So
for sure.
I've just been patiently waiting as a shareholder and very pleased as a long-term shareholder to see the stock up 17 times since I've owned it. So, if it continues to just do 1 or 2% better than the S&P 500, I'm a happy shareholder.
Amazing. Bob, it's been great to have you on today with some insight. We appreciate it.